Last week, Treasury Secretary Janet Yellen said on several occasions that failing to raise the debt ceiling would lead to, quote, a catastrophe. And Fed Chair Powell said it was essential for Congress to act quickly. Chair Gensler, as a former Treasury Secretary and Assistant Secretary focusing on financial markets, as well as a former chair of the CFTC and as chair of the SEC, you are uniquely positioned to describe what will likely happen if Treasury is blocked by Republicans from paying its bills. Can you describe what you expect would happen in our markets, both in the coming days and if Treasury does default? In particular, I would like to know what would likely happen to people's retirement investments and to America's businesses trying to raise capital and create jobs.
So we're motivated by our three-part mission, and the core in the middle is efficient, competitive markets. So I've asked staff, how can we help ensure even enhancing that efficiency? So right now, as you mentioned about commission or zero commission does not mean it's free. It does have some cost inside. Some brokers have payment for order flow. I would note some do not and also offer zero commission trading.
Pennies.
I think you're right. I think if we don't get our these exchanges, these lending platforms inside of the public policy framework, a lot of people are going to be hurt. It's a highly speculative idea that a token that may not have any ownership, they're all structured differently, and it's trading in the marketplace on the efforts of others, the potential that in the future it might be worth something because others will pay for it. Highly speculative, and it's not inside of our. They're not registering yet. Yes, I think it's central. I think it's an issue of our day that digital analytics are being used to not only optimize for our returns, but may be used to optimize for the company, the platform's revenues. And if they're being done that way in a robo-advisor, an investment advisor, or a brokerage, then that creates a conflict. It might create a more fun environment for us. Well, that's okay. But is it also creating more revenues? And what is that conflict there? And how do we protect investors?
Okay.
I thank you for that. And retail investing has increased. It's increased probably for multiple reasons, but zero commission, and frankly, just even the facility, the ability to trade on a mobile phone with ease has facilitated it as well, regardless of the price. There are a number of brokers that offer zero commission and do not do payment for order flow. Why I'm focused on the platforms, the trading platforms and the lending platforms, is because investors basically are giving ownership rights up. They transfer what's called a private key to the platform in most of them, and the platforms take custody. And those platforms then either trade on our behalf or lend to us and the like. And so I think such a tremendous amount of activity happens there. And it's a place that we could get better investor protection, customer protection alike. I thank you for the question. I do want to say if Representative Hill would like to meet with me one-on-one or anything next week or in the next few days, I'd be glad to do that. Representative Huizenga, I thank you because I was hearing that echo as well. But on your substantive point, Congressman Foster, I think that as we get close to October 18th, as Secretary Yellen has put out, we need to understand that markets can get pretty, they can do things that we don't expect. That as mutual funds, as big banks, as hedge funds, as capital market participants start to anticipate what will Congress do, what will Congress not do, we will be in uncertain times in those last several days. I'm familiar with a number of the things that you mentioned in terms of the People's Republic of China. I think our approach is really quite different. And It's a matter of how do we get this field within the investor and consumer protection that we have, and also working with bank regulators and others. How do we ensure that the Treasury Department has it within anti-money laundering, the tax compliance, and of course the financial stability issues that stablecoins could raise as well. No, I mean that would be up to Congress. I mean, what we're really working with the authorities you've given us, and I've said this. I think that many of these tokens, it's based on the facts and circumstances, but many of these tokens do meet the tests of being an investment contract or a note or some other form of security, that we bring them within the investor protection remit of the SEC. Look, we have around the globe 180 fiat currencies, meaning 180 different countries have, but each country has one. We have the US dollar, and it happens to be the leading currency around the globe. It's unlikely that 5,000 or 6,000 private forms of currency are going to persist. It just, economic history tells us that's unlikely. The handful that might be competing with gold or silver as a digital speculative store of value, as gold is a speculative store of value over the centuries, but not many of them. Most of them are investment vehicles. So I would say this: we already have. Oops, the gavel's coming down. But
is it a systemic risk? Yes or no? Yes or no?
I think the $125 billion of stablecoins we have right now are like the poker chips at a casino. And I think they create risk in the system that we have digital lending, crypto trading. That yes, I do think that if this continues to grow, and it's grown about tenfold in the last year, as we get closer to that, I think we will start to see fraying in the marketplace. And there's great uncertainties if we actually defaulted on our debt, terrific uncertainties, because treasuries are the base upon which the rest of our capital markets stand. It's saying, let's test the foundation of a house, and let's make sure the foundation of the house defaults. The rest of the house is going to have problems. Bitcoin, which was the first cryptocurrency based upon Satoshi Nakamoto's paper in the middle of the economic crisis in 2008, is a highly speculative asset, but it is a store of value that people wish to invest in, as some would invest in gold since antiquity. But I think you're also right that it is used, not just Bitcoin, but other cryptocurrencies, stable coins, to try to, as you said, arbitrage between regulatory regimes. Even poker chips in a regulated environment are a good thing. Poker chips at a casino do serve a purpose that provides greater transparency at the gaming table, and they even lower the security risk about money being stolen at the casino. So I just want to caution. I'm saying how it's economically being used. I think the working with our colleagues across the President's Working Group, we're going to come up with some recommendations